Welcome to Buy, Hold, Sell. My name's James Marley. I'm joined by Jeff Wilson and John Abernethy. John, I'll start with you. Telstra?
Telstra's a strong hold, around $5, good yield, good cash flow coming from the NBN. Earnings probably drifting upwards for the foreseeable future. Storm clouds probably 5 or 10 years away, so it's a hold.
Jeff, can you find room in your portfolio for Telstra?
No room in the portfolio for Telstra with us. It's a sell. It's been driven up over the last couple of years as retail investors have been looking for yield, and I actually think it's overpriced because of that.
What about Macquarie, a profit upgrade just recently?
Yeah, but they're still struggling to get to profits they went 5 and 6 years ago. That's fine. The share price is half of what it was pre the GFC. So $57, 1.5 times book. Return on equity is still poor at 10%, but it's a hold, but it's an improving outlook for the company, definitely.
Jeff, Macquarie?
Yeah, probably in the medium term. I'm more a buy on Macquarie, and that's because things have turned for them. John was mentioning obviously not as profitable as it was 5 or 6 years ago, but definitely they're well and truly over the worst, and the share price is showing that. And I actually think the momentum is in their favour.
Okay, what about Boral, looking at housing recovery here and offshore?
Yeah, I mean, we like Boral. We actually own Boral in our portfolio, and really that's, as you said, a housing recovery domestically and also in the US. I mean, the US business, recently, the last couple of years was losing $40 million, and historically they made $100 million. So, we just think it's a good turnaround housing play.
John, where are you at on Boral?
Oh, the turnaround's happening, but it's in the price, and that's true of the whole market. The market is pricing cyclicals. Some of these cyclicals which are predictable, the market's run ahead of itself. Boral's probably $1 overpriced at this level. Return on equity is going to improve. Management's rationalising the assets, but I couldn't own it. I'd be a seller there.
It's a sell. Last one, Seek. It's plenty of growth in that price.
Unfortunately, as you said, James, there is plenty of growth in the price, and probably a little bit too much growth expected in the price from our perspective. So we're more on the sell side. It just looks expensive on any fundamentals.
Is the expansion sufficient to justify the price?
Probably not, but the market's got ahead of itself, as the market will do in this sort of environment where there's not a lot of growth in the Australian market, so it's reaching for growth in offshore markets. Seek presents an opportunity, but again, it's $3 or $4 overpriced. So you're in for a rocky road here. I'd be selling it if I was a trader.
Okay.